So let's look at a couple markets here as we move into the final days before the FOMC meeting. Um, the dollar has been just kind of caught in this range between this top and this daily cycle low for over a month now. Could have gone either way. It looks to me like today anyway that it wants to maybe break out above this and right translate, or at least make a higher high. But I'm going to warn people that this is, I said before, whichever way the dollar goes into the FOMC meeting, it's very likely it's going to reverse on that um, meeting. So if it had gone down into a daily cycle low, then I would have expected the dollar to bounce on the meeting, but it looks like it wants to rally into it. So I think the odds are very high we're going to get a top on the FOMC meeting. So here's a weekly chart. You can see we've got big divergences in momentum forming. Classic sign that an intermediate cycle is running out of steam and potential top developing soon. So again, if you've listened to all the fundamentals for all the reasons why the dollar has to go up, we heard those same fundamentals up here, and look what happened. So I've said this many times. I just don't think fundamentals really apply in currencies. Central banks can print them like grains of sand on the beach, so it just doesn't make any sense to me that fundamentals are even relevant in the currencies. Sentiment, however, is, and I think that the dollar is. These divergences are warning that you don't want to be left holding the bag here when this cycle tops, and I think we are gonna top on the FOMC meeting. The daily cycle in the stock market is also getting very mature. We're into 30 plus days now. We've got the opposite divergence on the weekly chart in the S&P. So I would expect, if we didn't already put in the cycle bottom a few days ago, then I think we're going to do it on or maybe the day after the FOMC meeting next week. So again, I don't think I would be continuing to hold shorts into this, just assuming that the trend is going to continue down for the foreseeable future. I think we're setting up for a nice bounce. I think the Fed is they're either going to blink and not raise rates and push it out to January, or the more likely scenario is they'll go ahead and raise rates, but they'll say that they're on pause for now. And then I also think there's a good chance we could get a trade deal with China before the Democratic Congress is seated in January. I think Trump knows that there's going to be a lot of hostility from the Democratic Congress, and one way to fight that would be to enter next year with a trade deal. So I think there's a decent shot that we may get a deal between now and the beginning of January. Same divergence in tech. Tech is holding up a little bit better than the S&P and the Dow. We may undercut the recent low in the S&P here over the next 3 days. I'm not sure we would do that in tech, and that would be a good sign if tech resists moving below this low if the other indexes, the Dow and the S&P, do. So again, the same divergence forming here in the tech stocks on the weekly chart. And then finally, look at oil. This is the one component that's still needs to bottom for the 3-year cycle low in the CRB to form. I still think the most likely course would be a bounce and then a lower leg early in the spring, but there is the chance that maybe we're forming that 3-year cycle low here, a small chance, but still a chance. You can see prices just stretched way too far below these the 10-week moving average, and the TSI is starting to turn up here. So at the very least, I think we're setting up for a bounce. If stocks put in a bottom Wednesday or Thursday of next week and rally, I think the CRB will as well. And in order for the CRB to complete a 3-year cycle low, I think we have to have the dollar top, which is another um, warning sign for dollar bulls that the rally in the dollar is not going to be sustainable. Um, as the CRB moves into and completes its 3-year cycle low, it's going to almost have to demand that the dollar tops. So again, I would be careful with dollar long positions. It's likely you are going to end up holding the bag at the top.